Good morning and welcome to the pre-market session. Today is November 8th. It's exactly half an hour before the market opens. The last couple of days, we had really muted sessions, limited trading range, limited directional, really just sideways movement. So if we get that today again, or at least if it looks like we're going to get that today again, then this video will probably end up being a little bit shorter. Let's take a look at what's happening in the market. Before we look at futures, let's take a look. I want to just make sure that we don't have anything on the economic calendar. And it looks like we don't, except for Jerome Powell speaking in about 15 minutes. So that'll be interesting. That'll be something that we want to watch, see how the pre-market reacts to that. That'll give us a clue as to how things will open. But then he speaks again tomorrow. So I don't think these are major speeches. These are not official Fed speeches. He's visiting places, or he's visiting a conference, or he's invited to speak somewhere and he's speaking. So the market will definitely pay attention to what he says, but it's not a prepared speech. It's not an official speech. So the impact won't be as large as if we were officially talking about the Fed view and the Fed interest rates. So this will be more of his personal view, but that gives us a clue on what the Fed might do as well, which is why people pay attention to it. Petroleum report, not really going to care that much except for the energy sector. So let's talk about the energy sector real fast, because earlier over the weekend, what I said was, hey, I like the energy sector, I like the technology sector, and I would like to go short potentially the staples. So is that still true? What we have to do is constantly evaluate and update ourselves. And if a postulate that we make, or if a theory that we have gets invalidated, we have to change our viewpoint. So yesterday, XLE gapped down and it hit the MA 150, it hit the MA 200, and it traded down below it. It recovered a little bit, but it's still below that MA 200. And with that movement, that invalidates the original viewpoint that I had over the weekend. So China's demand for energy, or China's output and their export, has decreased. The GDP is not quite as good as had originally been forecast, although now forecasts are starting to be adjusted upwards. But if China is not going to be producing as much as we thought they were going to be producing, that means they're going to be demanding less energy than we thought they were. So even though we're going into the winter and the world is going to need energy, even though Russia and the Middle East have committed to decreasing supply, well, if your demand drops faster than that, then net demand, because if China is going to produce a lot less versus the extra demand over the winter for energy, net, that's going to be lower. Now, normally I would not think that that would be outweighed by the demand that is coming, but we're below the MA 200. So everything that I had believed would happen, I no longer hold that viewpoint, or I have to be willing to shift and update myself, especially since it looks like the energy market is going to open lower once again. And so I wanted to give that quick update. Let's take a look at the futures, see where we are. Flat, super flat. This is nothing. So no movement on the markets to give us an indication. So that might mean that we get another muted day. Although if we start to see breakout with conviction, or a movement with conviction, with volume, with large bars, then we're going to start paying attention to that, especially to the downside. Because if you watched yesterday's video, then you know that 7 days in a row is very, very rare. The last time we had that was 2 years ago, almost exactly 2 years ago. So to continue to expect green bars, is the more of these we get in the row, the less likely it is to continue. So we might get that green bar today because we're still below that MA 90, but I'm expecting the MA 90 to hold as resistance initially. So if we trade up to the MA90 today, I'm going to pay super close attention to what happens next after that. If it can break out, then this market is way stronger than I or probably anyone else would have expected, especially having this huge momentum surge upwards, parabolic movement, gap ups with huge bars. That would be unheard of to continue this movement, but it's possible. It's not impossible. The expectation, though, is that this MA90 will hold and will either consolidate in this range right here between the MA50 and the MA90, or we could pull back down to that MA150 or EMA20 right here. And that EMA20 is a pretty good level because that's a half movement. And we've talked about before, I think 2 or 3 weeks ago, where if we don't have good guidance in terms of support and resistance, a decent way to estimate where prices might move is halves. So from here, this bottom to this top, we would move half before resuming upwards to match this movement. So I take one range movement from that halfway point up again. Or another way of saying that is that I could take 1.5 times this movement and add it up here. And what you'll notice is that if I do that, if I go from here to here, that is 6.7%. So what's half of that? That would be another 3.35. So that would be 10%. And where's 10% movement upward? It's exactly this high right here. Okay, so it makes sense. So don't be surprised if it pulls back to that EMA20 or about halfway down from this movement and then moves up to challenge these highs over here. And that would be perfectly normal and expected movement. So either right now, the highest probability movements are chopping sideways and then choosing a direction, and we have an upward bias. So after a period of consolidation and moving upwards, or pulling back about halfway to that EMA20 and then moving upwards and then challenging these highs right here. So today, since we were very close to that MA90, we're going to watch that level very carefully because chances are we're going to pull back from that level. So if I was a day trader, what are my strategy? And I didn't want to wait all day and try to predict trends and all of this, is I would simply go and watch this MA90. So I left these bars on or these lines on from yesterday's video. The only thing I did was I changed the previous close to actually be yesterday's close. So these are going to be good levels. Look, we reacted to the Friday high very strongly yesterday. So I'm going to keep that. And then the MA50, I want to know because what we were just talking about was this movement between that MA90 and that MA50. And then the only line I might add right here is the yesterday's high, which happens to be where we look like we're going to open today. So I'm going to put that one in purple. So we want to watch these levels very carefully. At the open, do we start moving towards that MA90? And if so, or at any point today, if we approach that MA90, I'm going to watch very, very, very carefully because my expectation is that we're going to reject that MA90 and start coming downwards. And that could be a great day trade. Or do we start heading lower at the open and then start challenging the Friday high? And if so, we bounced so many times off of it yesterday that I would expect that to hold. And if not, then we'll see how far down we go towards the MA50. It'd be really unusual, a huge move if we went all the way to the MA50. So I'm not expecting that. But the level that I really would watch for is MA90 to the upside. So if we get another green bar for 8 in a row, that gets us super close to the MA90. And then would we get 9 or 10 in a row? The statistically very low probability. And so either a consolidation or pullback, and we want to wait for the market to tell us, because if it's a pullback, that's going to give us huge opportunities to enter at great prices And these would be opportunities to go slightly longer than I normally trade or you normally watch me trade. And I would be looking for 1 or 2 month time frame for us to move upwards and challenge these highs. Otherwise, if we consolidate, then I'm just going to wait until we break the range, again, bias to the upside, and see if we can move upwards. So with everything being very light, earnings starting to wind down a little bit, the Fed not being as much in focus, we do have Jerome Powell speaking today, but otherwise not really in focus. We're not pricing in. The market really isn't expecting anything to change. So the only real drivers right now are the technicals. And the last 2 days, you can see that the volume is down. So the average volume is this green line right here. And we've been above average or near the average for quite some time. And you can see these last 2 days, we started out this week with low volume. And so that means institutions aren't putting their money to work yet. So what I want to see is that volume come up, and then we pick a direction, and then that'll be our signal to go up if we consolidate, or we watch this come down to that EMA 20 or MA 150. And then again, we're going to watch for that bounce, especially if there's volume with it. And that'll be the other option for great entry points into the market. So right now we're going to be patient. We're going to wait for the market to tell us what is happening and when we're going to actually enter. But it's shaping up to be some really great opportunities ahead. We just have to keep our powder dry and wait for those opportunities to develop. Okay, so that's going to be it for this morning. Powell speaking in 3 minutes. So we'll want to watch what happens in the pre-market with this. Does that send us upwards towards the MA90, in which case I'm really going to watch that MA90 very carefully, or does it send us downwards, or does it just really not do anything? Because it could take some time, because it's not a one-liner, right? It's a whole speech. So it might take some time for him to actually say something for the market to react to. So be very careful the first half hour, 1 hour of the day, because not only do we have the normal opening volatility, but we'll have the influence of Powell's speech as well. All right, guys, mostly wait and see game, mostly waiting for the exact best moment to enter the market. So it could be a day to go off and do things that you enjoy, or to reflect. So review trades, review setups, start anticipating where you might want to move money. And we'll do a little bit of that in the aftermarket session. Have a wonderful day, and I'll see you in a few hours.